August was supposed to be a bad month in the stock market, but it turns out that wasn't true. But we are not out of the woods because September is historically the worst month in the markets. What is in store for us in September? What are the key data points coming? All of that and more in today's video previewing the month of the awful September. Let's go. What's going on, everybody? Jeremy Ritz here. Courage pays better than fear. Back with another monthly preview for you. And today we take a look at September because we are in the final week of August. I want to help you get prepared as much as possible for what is coming. And August was supposed to be the start of weakness. We're supposed to see weakness creep into the markets. We didn't see that. We actually saw new all-time highs. We saw a ripper of the day whenever Jerome Powell spoke in Jackson Hole. And really, things have flown in the face of seasonality this year. And you have to wonder, is it going to be the same story in September? Because it's the absolute worst month in the markets. And so we need to be prepared for a shift in trend, a change in trend, or who knows, maybe we'll continue bullish. But I want to make sure you're aware of the big data that is coming this month and just give you an overview and a preview of what to expect in September. So let's go ahead and jump into it. Number one, we have 21 trading days this month in this good, horrible, awful month of September. And actually, I love September, but in terms of the markets, it's not very strong. But if we take a look at the first week, we are closed on Labor Day, obviously. So enjoy your time off there, study some charts, get some extra work in. And then on Tuesday, the 2nd, we are going to start right off with getting information related to the economy. We are going to get ISM manufacturing PMI. That is obviously going to drive the markets. And because the Fed is so focused on the labor market, the JOLTS data that we get on Wednesday, the job openings, that's going to be important. So watch this data point that comes out on the 3rd because it will move the markets in one way or the other. Weak numbers more than likely are going to cement that rate cut that's coming later in the month. We'll talk about that here in a second, but make sure you mark your calendar for the 3rd for JOLTS. And then on Thursday, we are going to get ISM services PMI that comes in. So the services component of the economy. And then we are going to get AVGO earnings, Broadcom earnings, and they've been very strong. Are we going to get a push higher on them? Are they going to correct? We are going to find out there on the 4th. And then the big day, as you can see, next week is a pretty big week, but we get more jobs information. Again, the Fed is paying very close attention to this. If they see more weakness in the labor market, that is all but going to cement a rate cut. And if it's really bad, potentially it's not just a quarter point cut that we see. Maybe it's a full 50 basis points. So that takes care of the first week of September. So let's hop over to week number 2. And I want to point out here for all my NFL fans, this is the first NFL Sunday here. The Steelers play the Jets. I'm a big Steelers fan. We get to see Aaron Rodgers go up against his old team. And oh yeah, Thursday, it's the NFL opener. I believe Philadelphia opens there. So best of luck to all your NFL teams out there in September when things kick off. But anyway, we get a full moon on Sunday. Now, typically, go back and look at this on the charts. When you get a full moon, you see some buying come into play. That's typically a bullish move. I know that sounds crazy, but go look at it on the charts. And let's see if that carries over into Monday. No data on the 8th. And then, again, I have this marked out on the calendars. I do this for you guys. There's bullish sentiment the 9th, 10th, and 11th. And this is from the Trader's Almanac based on seasonality. So the 9th, 10th, and 11th tend to have a bullish leaning, which lines up with that full moon. So I'm just saying. And then we are going to get the inflation reports. And uniquely enough, I don't know if this is accurate, but in TradingView, it says that PPI is going to be announced before CPI this month. And PPI, the producer price index related to inflation, is coming September 10th. And then on the 11th, we are going to get the consumer price index and inflation report. And these are going to drive the markets. Jerome Powell and his 2% goal for inflation, he needs to see that. So while week 1 is all about the jobs, week 2 is all about inflation. And then we finish up that week with Michigan consumer sentiment, where you could see the optimism or pessimism related to the economy. So that takes care of week number 2. Heading into week number 3, We don't have any data there on the 15th. If we just look at the sentiment on the 16th, another bullish day. And we also get retail sales. So we get to see the health of the consumer. Are they spending money? Are they not? That's going to be important. And then the big day, ladies and gentlemen, right here, the 17th, Papa P is going to have his press conference. The Fed is going to make their decision. Will they hold rates steady? Will they cut rates? This is going to be important because if they don't cut, you will see a drop. But even still, when you look at the history of rate cuts, when they happen, what follows is typically the market drops. So just have that in mind. And also, we are going to get an updated dot plot. I did a whole series on this back in June. The dot plot is where the Fed members lay out what they see happening with economic policy for the next year. Are they pricing in more rate cuts? That's going to be important. So pay attention to that. And we're also going to get building permits and housing starts on this Wednesday. So the 17th, smack dab right there in the middle of the screen, the most important day of this month. So be prepared for that. And then uniquely enough, following, because I said if they do cut rates, typically you'll see a drawdown in the market. We get our first bearish sentiment day of September. And oh yeah, quad witching day. That's when all those options, futures contracts expire. So this could be the day. Be ready where things start to correct and fall. And we are in desperate need of that. Things are extended very far to the upside. Can we get a little bit of a pullback? The 19th would be a good day for that to happen, following any type of rate cuts by the Fed. And then we head over to really the last full week of September. We have another bearish sentiment day. And just something in case you guys didn't know, typically if you have a big red Friday, you typically have a big red Monday. So just keep an eye on that. If we do have a red close there on the 19th, it's a bearish sentiment on the 22nd, bearish sentiment on the 23rd here. So this would be a good time to have some puts ready to take care of any downside movement. We also get existing home sales on the 23rd. And then on the 24th, I have on here MU earnings. MU hasn't had a really big pop on earnings in quite some time. Unfortunate that they are reporting in the middle of this weakness here, falling quad witching day and in that bearish sentiment. So just keep an eye on that. And then the 25th, we have more bearish sentiment. And oh yeah, it lines up with GDP. We're going to get that. That's a huge market mover. Durable goods is another one that's going to move the market. Those will be coming at 8:30. And then finally, when we go over to Friday, we get our first bullish sentiment day, seasonally speaking, in quite some time on the 26th. And that is followed by PCE, the Fed's preferred gauge of inflation, and also personal income, personal spending. So more data related to households, the consumer, their health, how they're doing. So that's going to be important as well. And then when we head here to the final 2 days of September, the last day, bearish sentiment. And I want to point out that this is the end of the current fiscal year. And if you could see, I have listed the government shutdown bill must pass this day. So that's always something to keep in mind whenever you hear discussion or controversy saying, oh, the spending bill has to pass or they're going to shut down Congress. That has to be done by the 30th. If that isn't done, or if they're going to the last minute, that is going to create some weakness. So the way that I'm setting this up and just being prepared is I think around that 17th, again, that Fed meeting, here is where I'm going to strongly consider protecting myself with any swing trades I have, locking in any profits, and just trying to move to not 100% flat, but maybe 50% flat in terms of swing trades, and having some downside protection or even some short plays to capitalize on any weakness that comes into the end of the month. So there you go. There's a preview of September, what you have to look forward to. And then October is typically when you get a dip or correction. That's where things bottom out, and it sets up for November, where the best 6 months of the market start, right? And you get that Santa Claus rally. So lots of great stuff coming up. You are now prepared for September. I appreciate you guys so much. Thank you for supporting the channel. Check out the NVIDIA earnings preview that I put together. Let me know if you have any questions. I'm here to help you. Don't forget about the free boot camp coming up the 15th, 16th, and 17th. Right here, 15th, 16th, 17th. I'm going to be giving away free cash to fund your trading account. I'd love for you to join me. The registration link is in the show notes for that. And I'll see you back here for the next video. Make it a great day, everyone. Take care.